morning and welcome everyone to Moneycontrol. You're watching the opening bell and I'm your host Nickey Mirchandani. Along with me is my colleague Nandita Khemka, who is essentially, let's actually look at the markets in a nutshell. We're looking at a steady start, somewhat tracking the Asian pairs at this point of time, which are trading in muted. Today's, let's just say Tuesday's price action reaffirms the buy on dip strategy. Nifty respected in buy on support, the first level with its support at the second level. Series low was made on day one itself. Good chance of high on expiry day. Now market showing some signs of distribution in the mid caps. Keep an eye out on market breadth. Last 3 days typically have been poor. Most mid caps have started to show some signs of fatigue out there. Signs of late fatigue, let's just put it that way. And it's the first time in the current rally that the market breadth is poor. Nandita?
Well, hi, Nickey. Great to start the show with you this morning. But as you were mentioning, of course, the setup remains on the positive side. And, if you look at the Nifty, we saw a very good recovery coming in for the benchmarks in the second half of the session, very close to that 22,200 mark. And the GIFT Nifty, of course, this morning also hinting at a start above that key level. Also want to point out that the Bank Nifty has managed to sustain its, defend its 21-day exponential moving average of 46,350 or thereabouts. So, of course, that's one question that I would like to toss to our technical expert also about the fact that, since the Nifty Bank Index managed to defend that crucial level, is most of the selling out of the way when it comes to the Nifty Bank Index. We'll be talking about all that and a lot more over the next 30 minutes. But let's take a look at the top headlines before we move any further. Well, it was a mixed close on Wall Street. The Dow slipped for a second straight day on the trot, and the S&P 500 and Nasdaq, however, managed to end the day on a positive note. This morning, Asian markets are trading mixed. Investors are awaiting key inflation data from the US as well as China. The GIFT Nifty, as I mentioned, is signaling a higher start for the Indian market, so we can look at an open above that 22,200 mark. Among stocks in focus, the main stock to watch out for will be Vodafone Idea, given the fact that the board has approved raising 20,000 crore rupees through the equity route. The promoters will also participate in the exercise, and the company will also continue to engage with lenders to raise another 25,000 crore rupees in debt once the equity fundraise is complete. This is something we'll be discussing at length, given the fact that we also have a couple of brokerage notes. Some of the brokerages maintaining that this could in fact turn around fortunes for Vodafone Idea. But with that, Nickey, would we like to get on board our first guest, or would you like to take us through the FNOQs first?
Yeah, let's address in the FNOQs first, and then we can go on to our fundamental side, or rather just say technical side of the story. What remained new in the ban is Indus Towers. That is an interesting one. Vodafone Idea is clearly the stock maker of the day, and the only way to play through it for the last couple of days has been Indus Tower, which now sits in that ban, new in the ban. What still remains in the ban is Canara Bank, Sale and Z Entertainment. What comes out of the ban is Balrampur Chini. Nandita?
Right, with that, let's get on board our first guest for today. I think let's get the technical guest on board first. Joining me is Ruchit Jain of 5 Paisa. Ruchit, if you're there, what is the setup looking like? I mentioned that the Nifty Bank Index has managed to defend its 21-day exponential moving average. So on the higher side, what would you be watching out for on the Nifty Bank Index? Do you think much of the selling is out of the way? And particularly for the Nifty, penultimate day of expiry, so 22,300, do you think we have the capacity to end above that level?
Hi, very good morning, Nandita. Very good morning, Nickey. Nandita, if you look at last 2 or 3 trading sessions, our markets has been more consolidating within a narrow range. And if I look at the options data, since we are just 2 days away from that monthly expiry, then a lot of writing has been seen on both call as well as put options. While 22,000 put option has significant OI outstanding, even 22,200 as well as 300 call options also has decent open interest of about 78-79 lakhs. So this indicates that markets may face that resistance around 22,300, and it won't be that easy to surpass and close above that level, unless we see any breakout about 22,300 and these option writers start unwinding their positions. Then only I think things would change. Otherwise, market should remain within this broad range from next 2 days perspective. Bank Nifty certainly yesterday was quite an interesting session because yesterday low of around 46,300 is a very crucial support of the 21-day EMA that you just mentioned. I think if that is held on, then we can expect some pullback moves towards 47,000 mark in the Bank Nifty index. But more or less, I think it could be another day where traders would have to look for more stock specific opportunities rather than index, because if you already open on a minor gap up, then the 22,300 would come in the resistance where good amount of OI is seen.
All right, Sandip, what's going to be today's strategy? What should one look at buying at the 10 DMA with the stop of yesterday's low? That's one. Do you also see some signs of fatigue coming in for the mid caps? That's one. Second, and of course, the third largest question, which I think most of the traders and the investor community would rather want to know, how do we play Vodafone Idea next? 45,000 crore has been the fundraising. 20,000 is going to be coming in from equity, and of course the remainder is going to be through debt. But how does it look like on the chart?
No, so I will answer all the questions fundamentally. So first, coming to Vodafone Idea, I think in my view there is a massive demand for telecom services still, and there is definitely a space for one more player. Unfortunately, we have seen telecom industry going through the same pain which airline industry has gone through, where only you have couple of strong options. Even telecom is even worse than that. We have only probably two options. So I think with revival of Vodafone through debt and equity will give a third option to the consumers. And I think that now with pricing environment continuously improving in last few quarters, I think the pain which this industry has suffered earlier, that pain will go away slightly, and it is a better opportunity in my view for Vodafone Idea to revive. Having said so, I think this industry is a capex heavy industry, and you need to keep on putting in money to get new bandwidth, new spectrum, and also to invest in the towers. But if you are able to manage pricing or improve little bit on pricing, I think there is good money to be made, in particularly in countries like India, where you have huge consumer demand, and where data it can be used across wide spectrum of services. So, and with all these Digital India initiatives and payment gateways and all, I think the usage of data services is very high. So I think it is a good time for a third player to come in, and if it is revived well, although they have lost substantial amount of subscribers in last few quarters, and also their net worth is now negative, but I think a strong infusion of funds, both debt equity combination, could revive the company quite well, given especially the pricing environment is suitable now.
Right, Sandip, Nandita also, coming in. You spoke about Vodafone Idea at length, but what about Bharti Airtel? Recently we had comments from Sunil Mittal in an exclusive interview with Moneycontrol, where he said that they are awaiting the final nod for the launch of their satellite-based broadband services, right? But of course, there is stiff competition from the likes of Elon Musk's Starlink as well. Do you think, a war could be brewing in the broadband satellite services end now in the telecom space next?
So yeah, see, this is something which is going to happen, but you have to remember that disruptive technologies generally take a lot of time. I have been covering telecom for long time, since I think almost 2005. I used to cover the telecom equipment providers also, Nortel, Cisco, all of them. So I think this industry is very disruptive, and technology disruption keeps happening, but the gestation periods are long. So let me put it this way, that the satellite things now, these people are talking right now, but it has been, experiments are going on for last decade or more. We have seen some success with Google Balloon in regions of Australia and New Zealand. We have some success on satellite side also, but to put it in a mass scale and to reach to the last customers and all those things, I think we are at least a decade away, if not more. And in that decade is enough time for these companies to strengthen their balance sheet, to strengthen their offerings, and be prepared from balance sheet side to take on that opportunity.
All right, Sandip, I'd also want to ask, what does this mean entirely for the telecom industry? Sure, it's a good news, but how are you reading into it also for Bharti Airtel? Because the one player losses, let's just say there's a survival premium which comes through. Most of the brokerages have given in a sell rating or have retained that kind of bearish stance coming in for Vodafone Idea. But Bharti Airtel on the other side, do you think it's going to be, in today's session at least, till the time we see the fructification of the fundraising coming through in a bigger way, you think Bharti Airtel will continue to gain from out of this? How do you view the entire telecom sector and your view coming in for Bharti Airtel?
No, so I think that, today some news coming in or not coming in, there could be some trading moves, which is very difficult to predict. But let me put it this way that, I think the industry environment today is much more conducive for Vodafone Idea to revive. And I think if Vodafone Idea revives, it will be very helpful for the whole industry. If you see, because the ecosystem becomes stronger, you are able to share the network spaces, you are able to share the infrastructure, you are able to, share good practices. So there is a lot of benefit when there are, when there are two players, both consumers also suffer and the provider also has challenges in getting a good, experienced talent and all those kind of small things which we believe are qualitative in sense, but they help the business in a big way. So I think when one more player revives strongly, it will be really helpful for the whole industry and it will be helpful for all the players. As far as Bharti and Jio is concerned, in my view, when both the strong balance sheet players like Jio and Bharti, they have a tacit understanding of not getting into the price war anymore and taking decisions rationally, which we have witnessed in last few quarters. I think then there should not be a challenge if Vodafone Idea comes, because Vodafone Idea will definitely not play on pricing as a USP for them. They will try to play on some other plank, and because pricing is a plank which has led to this situation in the industry. So I don't think anyone, and more so Vodafone Idea, will be in a position to do that. So they will probably play on their offerings or the coverage or the towns and cities. So it will be more of a non-pricing led strategy which they will play. And if that is the case, then I think it is not at all a bad news for either Bharti or Jio.
Right. Let me hold that thought, Sandip. Let me bring in Ruchit once again. Ruchit, two questions to you. A, your thoughts on where Idea is headed in today's session. Of course, we've had brokerage views coming in this morning wherein target prices have been in single digit range, right? 5 to 6.5% or thereabouts. 6.5 rupees, I beg your pardon, thereabouts. But 15.5 rupees is where the stock is at the current juncture. Of course, on the back of this particular news flow, do you expect higher levels in today's session? A, and secondly, just a few minutes to go into trading, right? What would your F&O strategy be for the day?
So I think initially Vodafone Idea should see some correction towards 13.5 to 14, where major support would be seen from a short-term perspective. Only if that breaches, then only we would see some mid-term downtrend coming in the stock. Otherwise, at least for time being, I would avoid bottom fishing over here and look at what happens, how the stock behaves around the 13.5, 14 mark. And as far as trading ideas goes, Voltas would be the stock where I would recommend buying today. Good price volume action, breakout from a consolidation phase. We expect this momentum to continue. Short-term traders can go long with stop loss below 1090, expecting targets around 1180 to 1200 range.
All right, just about seconds to go for market open. Looks like we are poised for a positive start. In fact, the Nifty above that 22,200 mark. The GIFT Nifty, of course, was hinting at a start above that level. And we have had the first ticks coming in. 22,200 is where we are at the current juncture. Bank Nifty in a spot of bother, just about flat with a negative bias. We are coming back into the positive zone when the Bank Nifty is concerned. 46,600 is where we are at when it comes to the Bank Nifty. Mid-cap end of the markets also, seeing some bit of recovery after yesterday's tepid close. So mid-cap index up 0.2%. If you look at some of the movers and shakers today, Airtel is among the top gainers. Nickey, what are the gainers and other gainers and losers that you're spotting right now? As I mentioned, Airtel among the top gainers. On the flip side, you have BPCL, that's the top loser. Take us through some of the key movers in today's session.
Sure. Go ahead with that. I mean, if you look at the start that we're looking at, it is a good start for the markets coming in clearly. Mid-cap and small-cap index, where there were fair bit of signs of weakness which has come through, has now finally seen that recovery, as you just mentioned. But let's look at the top gainers that we have on the screen for you. HCL Tech is in the list. Along with that, we're looking at Bharti Airtel, Hindalco also, for that matter, Tata Consumer Products and HUL. Well, some of the top gainers right there on the screen for you. But let's look at the top losers. Wipro, Power Grid, Apollo Hospitals. Well, these are top losers. BPCL, Grasim, Ultratech Cement. Well, you can see Grasim and Ultratech Cement now being the top losers. And surprise, surprise, no actually price for guessing out there. It is Bharti Airtel, which has made it to the top gainers list. But that's that. When it comes to the top gainers, it is a good start. What I'd like to address is the detailed bit of Vodafone Idea, where the board has approved a fundraise of up to 45,000 crore via an equity and debt. Now, the number of market capitalization of this company is roughly around that 76,000 odd crore. The debt that they're sitting in with is 2 lakh crore. The promoters are going to be participating in the fundraise, and there's going to be a meeting for shareholders essentially on April 2. First round, they have, they're going to be raising in 20,000 crore of equity fund. And the other bit is the debt part, which is going to be coming in. The fundraise essentially will enable to make the investments towards the 4G expansion and 5G rollout. To bear in mind the fact that Vodafone Idea is the only network which until now has not rolled out the 5G. So a bit of lag there. What CLSA has to talk about it, it's maintained in that sell rating, the target price of ₹5. The board has approved a $2.4 billion equity raise. It says that the company is in talks with a potential investor, but fundraising still is pending. Expects the financial crunch for the year FY26 calendar year, when the annual spectrum and AGR payments will be due. Over 12 months, Vodafone has lost 120 basis points of revenue market share. What Nomura has to say typically about this is it's reduced in the target at rupees 6.5 per share. It talks about the change of fortunes now on the cards for this one, and the funds which will enable 5G rollout, funding that should improve on operational performance too, and an external investor coming on board should be a significant positive coming in on this one. Morgan Stanley has a report coming in on the telecom sector. It's talk about Vodafone India closing in the fundraising, seeing the current market structure continuing near term, increasing the conviction on industry being in the repair phase with potential increase in the tariffs. What also we've picked up is CLSA on Vedanta, right? There is an upgrade which is coming to underperform from sell rating earlier for Vedanta. The target price also has been raised to 260 with a deleveraging target, capital allocation and corporate structure. But Sandip, I'm going to come back to you. What do you make out of Vedanta essentially? And also the industrials seem to be quite in flavor. Though in today's session, we're seeing fair bit of profit booking coming through for Grasim and Ultratech Cement. Of course, there is a fair bit of destruction already which is caused by Grasim in the paint sector. What's your view there, and what's your overall outlook for industrials?
So I think, we are getting into election year, and government focus, if you see in last few years, have been towards infrastructure in a very big way. And moreover, all these housing schemes for the poor and others have also helped. So I think the infrastructure and related sector, along with the materials and building material industry, should do extremely well going forward also. And I think as far as the paint industry is concerned, Grasim coming in will definitely have some. I see some pricing war honestly in the paint industry, because till now Berger and Asian Paint had been doing very good business, and they did not have so much a pricing war between them. With new players like Grasim and also to some extent JSW coming in, I think this industry again will go through some pricing war and disruption, which is very much possible. Although in B2C business, the network of distributor and also the consumer preferences prevail. So the chances of losing significant market share is less. But whenever a new player comes in, it definitely eats in someone else's market share. So I think that, this industry will have some interesting times going ahead. As far as paint is concerned, in terms of cement, I think we will have very, very good 4-5 years. Obviously, this is a seasonal industry. When before monsoon and during monsoon, you will have some demand declines, but otherwise this industry should do well because of the strong focus of the government both on housing and also on infrastructure. So we are very positive on the cement industry.
All right, positive view on cement industry, and of course when it comes to paint, we'll have to see how the competition really pans out and what kind of disruption really Grasim manages. But with that, thanks a lot for joining in, Sandip, this morning and sharing your thoughts with us. Appreciate your taking our time and coming in.
Thank you.
Well, with that, let's address some of the viewer queries that are trickling in this morning. I know we didn't really, start at 8:30. Of course, we will be taking up your stock-related queries in the 9 a.m. show now onwards. So keep your queries coming in. We haven't forgotten you, of course. We will be taking up all your queries. Send them in with the hashtag AskMC on our live feed on YouTube, and we will take them up with our technical expert, on the show. But today, of course, Ruchit is there, and Ruchit, we are getting a barrage of queries this morning as well. First query on TCS. Yesterday, of course, among the top gainers, we had a upgrade from UBS coming in, wherein the target price is set at somewhere around 4,700, right? So right now the stock is somewhere around 4,100. We have a query coming in from Poonam. She wants to know what one should be doing with the stock for a time horizon of 2 years. Technology stocks have run up quite a bit on hopes of an early rate cut, but that ain't happening. So do you see chances of some bit of correction, or do you think what UBS has put out, the fact that TCS may emerge as a leader in the technology pack, do you think that would work well and we can see higher levels of somewhere around 4,500 in the next few months?
So the broader trend is not negative for some of the large cap IT stocks, although we have seen some short term corrections of late, but that high top high bottom structure is still getting continued. Even in TCS, if you see the recent dip which you got from the highs, we did not see any kind of high volume based sell off. And the 40 days exponential moving average as of now is acting as a good support for the stock. So from a very short term perspective, 3950 is a very good support, and a bit medium term perspective, 3800 has become a good support base. So I think if we can hold for next few months, probably I think the stock should head higher towards 4400 to 4500. I think that's where it should again take a review on the position. So my call would be to hold on to the stocks from a 4 to 5 months perspective.
Right, from a 4 to 5 month perspective, you can hold on to the stock. The next query is on ICICI Lombard. Satvika Ranganathan wants to know your thoughts. Of course, after yesterday's up move, the stock is cooling off today. Thoughts here, especially on the insurance space. We've seen a good up move. The likes of ICICI Lombard, even other insurers for that matter, LIC hit a 4-figure mark, right? So what would your thoughts be?
So in fact, if we see within the insurance space, I think the general insurance stocks have been doing quite well, and ICICI Lombard had consistently seen a good price volume action where moves have been supported by good volumes. A bit of consolidation was there for this month of February, but again we witnessed a breakout yesterday from that consolidation. So ideally, should hold on to the existing positions. If we get any kind of dips around 1650, 1680, then I think that would be a good range to add fresh new positions as well. And stop loss on entire long position should be placed just below 1600. So it's better to trail stop losses higher as the stock price moves higher and continue to ride this trend.
All right, that's all that we have, at least when it comes to the technical side. Of course, we're going to be addressing in the queries in just a jiffy, but let's bring in more fundamental story, right? Let's bring in Deven Choksey, who's the managing director at DRChoksey FinServ Private Limited. Morning there, how are you doing?
Very well, Nickey, very well.
Okay. Good morning. Let's start off with your assessment of what do you make out for Vodafone Idea, the fundraising that has come through. 45,000 crore is what we're looking at, 20,000 coming in from equity, remainder coming in from the debt. For a company which is already looking at a debt of more than 2 lakh crore and a market capitalization of 75,000 crore. A bit of profit booking which has come through for Vodafone Idea, but Bharti Airtel on the other side is of course on the gaining side. How are you connecting the dots overall for the two players and in the larger scheme of events, the industry put together?
Well, I think it would be an interesting thing to watch out for. I think on few counts. On one side, Vodafone Idea has been systematically losing their customers. So current customer portfolio that they have is largely restricted to, I think, the 2G segment of customers, which are slightly getting converted now. And on the other side, I think we have a serious challenge of managing this particular situation of financials and the technology thereafter. Uh, Agreed that out of 2,15,000 crore worth of total debt portfolio, 1,85,000 crore belongs to Government of India. Balance would be left with the bankers. So to a greater extent, I think they have first obligation to keep paying the debt, I think, which they have uh, taken from the bankers particularly. That is one area where I believe that I think they first raise money that they are raising is likely to be paid for, I think, these kind of debt that they already have in the second thing, which I believe they are going to be spending money towards expanding the 5G capability. And that is where I see a challenge because already the peers, the Bharti as well as Reliance Jio, both of them have significantly invested into this particular area of activity, particularly Jio. And at least I think they have a lead staff around 10 to 15 years compared to what Vodafone Idea would have eventually when they implement the 5G. So to a greater extent, I don't know how exactly this particular game will be played out by Vodafone Idea in time to come. Even though they keep on spending money, I think whether they really get, I think, the desired revenue share out of the market is something which I would like to be interestingly watching it out a year after. So at this point of time, the view remains very clear. We'll have to wait and see how they implement their game plan and how the results come out thereafter is something which we have to see. I don't see at this point of time any change in the product proposition or the unique selling proposition as far as I think their offerings are concerned in this space. So we'll have to wait and see what would be the game plan and which is getting unfolded thereafter.
Right, Deven, coming to you on Shriram Finance, right? There's a lot of buzz around its inclusion in the Nifty. In fact, today post-market hours, there will be a meeting on the index changes, right? But, yesterday we saw a heavy profit booking in the stock. Today, mild recovery coming in. But within the CV financier space, how are you viewing Shriram Finance now?
Extremely strong positioning, strong position, I think, as far as I think the CV financing space, both in the pre-used vehicle as well as the new vehicles, where the commercial vehicle demand is increasing. In my viewpoint, I think this company is very, very strongly positioned. And I think the Southern Belt is something which they are very strongly commanding at this point of time, I believe. So I would like to say that, yeah, I think the fundamentals remain absolutely solid. The valuation wise, the stock probably is not as expensive as the peers are in the marketplace. At the same time, I believe that I think inclusion into the indices, mainstream indices, could possibly bring in larger amount of participation from some of the funds who have up till now not been adding to stock to the portfolio. So I think all the items in the checkbox, I think, is working out well for this company. Let's see how exactly the business situation results into a better kind of profit performance for the company going forward. But potentially remains extremely convincing at this point of time.
All right, Deven, now what do you make out of Vedanta? There is, of course, an analyst day takeaway which took through, and CLSA on back of that has upgraded the counter now to underperform from sell rating earlier. Talks about the indication of EBITDA target being a little higher than what they were anticipating. That's, of course, on combination of a couple of things, right? Capacity expansion, backward integration, and value addition put together, especially the one that you're seeing from aluminium division. What's the assessment there? Do you like this stock? And also, what's your view now on the metal space? Or let's just say more on the non-ferrous side of the story.
We remain extremely convinced about the prospects going forward for both the white metal as well as the ferrous metal. And we believe that I think this particular time is going to be lasting for next 8 to 10 years for India as a whole. The demand growth is absolutely very strong. On the other side, one more important equation which is changing in the industry, the use of green hydrogen for the captive use for the players like metal commodity companies or refining companies. That would mean a great amount of saving as far as energy cost is concerned for most of the companies. So Vedanta Group, I think, Seven accept the situation of their restructuring program which is underway. I would think they hold the business prospects which are far more stronger than ever before. And my take would be that if they get out of this particular restructuring process sooner, then I think the stock would find de-rating. At this point of time, I would think that I think the stock holds reasonably good promise, but I think the market performance may not be as strong as far as the stock is concerned till the time they complete this exercise of reorganization, stroke restructuring of the businesses within the group.
Right. What's your view on NTPC? The company is, of course, looking to unlock value via IPO of its green energy arm, right? So, of course, the stock has seen a very stellar run. More legs to this up move going forward?
There is nothing which is suggesting downside per se at this point of time in this company. And even if the up move has taken place, it is largely the re-rating has taken place in the company. The fundamentals are still not fully supporting the up move that has happened. So we are setting on the potential of renewable foray is something which is keeping the market active at this point of time. And that's where I think you see an opportunity where this company could possibly end up in creating a larger size. And that too, this is the time or the opportunity where probably I think they would have the possibility to invite some of the global players to join hands along with them in the space of renewables, particularly green hydrogen. So we remain distinctly positive about the prospects going forward. Though the financial performance of the company is still taking time, it is not coming up as much strong as the strong movement in the stock prices.
Right. Hold that thought, Deven. Ruchit is waiting by and we are getting a flurry of queries this morning. So let me take up one more or a couple of more queries with Ruchit. Ruchit, Eicher Motors. We have queries coming in on this particular stock. What is the next, target level that we'll be watching out for on the stock? If you're talking about a 5 to 6 month time horizon.
So of late, we have seen that the stock has shown a bit relative underperformance compared to Hero MotoCo and Bajaj Auto within the same sector. But I think the price-wise corrective phase is behind us, as the stock has already seen a correction from 4,200 to 3,550 recently, and now the stock is going through some time-wise corrective phase. So I think for short to medium term, the stock may remain in a broad range of 3,700 to 4,100, 4,150. And I think if the stock comes around that higher range of 4,150, that's where the resistance could be seen.
Right, that's those are the levels to watch out for on Eicher. Hope that answers your query. But IRFC, Rahul Shah wants to know your thoughts, and he wants to know whether one should buy more at current levels. After the stupendous 200% run over the last 6 months, this stock has been cooling off a bit, right? If you look at the last 1 month, it has cooled off somewhere around 10 to 11%. Do you think this is a good opportunity to buy after the kind of up move that the stock has seen?
So there could be some time-wise correction in the short term after this recent run-up, which you just mentioned. The momentum readings were quite overbought at the end of January, and we have seen that the entire month of the February, many of the railway stocks have gone through some consolidation phase. So I think this is just a cool-off period after that recent run-up. So buy and dip should be the strategy in such consolidation phase, and the major support for the stock is around 130, 135 kind of range. So if we get the stock around that 130, 135 mark, then the risk-reward ratio could turn favorable to create fresh longs over there, because the stop loss would be quite less from those levels. So I won't recommend it current levels. I think some consolidation could be expected, but if the stock comes to the lower end of the range, then I think one can look for buying opportunities there.
All right, that's the view on IRFC. But very quickly, one last query I'll squeeze in on Divi's Lab. Abhijit wants to know your thoughts. What one should be doing at current levels. The stock, hasn't really been doing much. It's been stuck in a range. So at the current levels from the pharma pack, do you think you would give this one a miss and perhaps look at others?
Yes, probably. Relative underperformance within the sector can clearly be seen in Divi's Lab in last few months. So we may not see any significant price-wise correction from current levels, because already the stock price has corrected. But I think if the entire sector performs, then we can expect a relative outperformance from stocks such as Lupin, Sun Pharma, Dr. Reddy within this space. So I would prefer those names over Divi's Lab if one has to take fresh positions here.
All right, I think this sums up our query segment for today. But any recommendations from you for the rest of the week? We have a long one, given the fact that Saturday is a special trading session.
Yeah, so some of the banking stocks I think could see some relative outperformance or a pullback move, within which Federal Bank is one stock which is trading around its support. Recently, the stock has been in news, and we have already seen a good amount of volatility coming in. But post the correction from 164 to 150, the stock is trading quite close to its support zone. So the risk is quite less over here. If we create fresh longs, one can go long with stop loss below 148 and expect a pullback move towards 164 in next 2 to 3 weeks.
All right, Ruchit, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation right here with us.
Thank you.
All right, let's navigate our conversation now quickly to Deven Choksey, who's waiting on the sidelines. Perhaps apologies for the long wait there. Let's understand. Let's take a little aerial view on the markets. What's your assessment right now? Given the fact that there's been a fair bit of promoter share sale that has come through in terms of the block deal that has technically been happening for the last couple of weeks, 2 weeks to be more precise. We've seen fair bit of fatigueness now being witnessed even in the mid-cap names. For the month of Feb, you would see an underperformance for sure, which has come through as compared to the frontline index. How are you looking at it, and what kind of strategy would you now suggest for the markets?
Most of the mid-cap, small-cap companies, promoters are definitely requiring to dilute their holding, largely because of the growth factor that they need to address in their businesses. At the same time, mid-cap, small-cap companies, promoters, I think, are also being asked by the investors to share some part of their equity with them, so that I think they can participate into the post-listing scenario of these companies. So that is a reason for which we are experiencing the sale coming in from most of the existing promoters of the smaller and mid-sized companies. In my viewpoint, I think valuation-wise, since it is a second question, valuation-wise, I believe that many of these mid-cap, small-cap companies are running ahead of their time. Even after considering the growth that they are assuming, I still feel that I think they are quoting at FY26 and beyond, which is probably, I think, making them more expensive at this point of time. So maybe the market does the adjustments as far as I think the correction is concerned, price correction is concerned. And many a times, I think, if not price correction, it is a time correction, which also happens when the stock price assumes significantly high amount of valuation. Many of the mid-cap, small-cap companies are currently valued leach in the marketplace, and they are due for some correction, be it price correction or time correction. So that is a caution that investors need to exercise. Otherwise, I think overall long-term approach, investment story remains intact. Maybe I think some small profit booking and then re-enter at a lower price should be a right strategy for many of the mid-cap counters.
All right. Deven, I'd also want to chat with you about Jio Financial Services, a bit of profit booking which has come through in today's session, but otherwise the stock has scaled through a record high. I do remember chatting with you at time of Diwali when you suggested this particular company as one of your top gainers or the top recommendation for the year. You think now with the kind of rally that we've seen for Jio Financial Services, much of that has already been captured into the stock price. Also, we've seen significant amount of support coming through from RIL. Your view both on Jio Financial Services and RIL from here on?
So GeoFin is, I think, a 5-year story, at least to begin with. And anybody who is basically holding the stock for a view of 5 years, I think they will make a lot of money. That is what my underlying understanding on the subject is. Those who are going to be trading for short term, I think they may have to re-enter into it at a later date. That is what I understand. But that is a subject that traders would understand far better than what I do. In my understanding, I think Jio Financial is, I think, on a very strong wicket. On one side, they have got the NBFC vertical where they are addressing the total addressable market size of about 50 lakh crores, both in the B2B segment where they address the Kirana merchant and in the B2C segment where they address the retail customers who is basically either entering into Reliance retail shops on the ground, which is 18,000 plus, or coming through a Jio kind of a platform where they are already having a significantly large amount of, I think, market share too. In my viewpoint, I think the online-offline combination is also equally strong for this company, GeoFin, to get into the Reliance's retail side of the business in extending the loan book. So that is one area where I think we remain very comfortable in the NBFC space. with a net worth of 1,40,000 crore and ability to lend about 7 lakh crore is a strong proposition that they are starting with. So I think that could be considered as a strong point for investment. Second vertical, which is AMC vertical, where the BlackRock is the partner with them, likely to launch ETF products sooner than later. So that is once again, I think, giving them an opportunity. And given the kind of customers that they have, including on Moneycontrol platform, I think that cross-selling would happen relatively smoother and faster for this company, GeoFin, going forward. Then the insurance vertical, which they are planning to get into, which is again, I think, suggesting that they would probably corner the customers which are coming to them through the Moneycontrol kind of a platform, or for that matter, even other platforms like Geo platforms. There probably, I think, they have opportunity to reach out to those kind of customers with micro insurances. And the fourth platform could be distribution of wealth product, I think, which I believe is again a very strong proposition given the kind of India market growing rapidly, both for mutual fund as well as insurance products, and including for the banking products for retail customers. I think this company is very well positioned. So GeoFin remains a convincing investment from next 3 to 5 years investment in your portfolio. As far as Reliance Industry is concerned, each of the verticals, be it, I think, the consumer-facing verticals like Geo Platform or Reliance Retail, or even for that matter, the verticals which are industrial product verticals, which is refining and petrochemical segment, oil and gas exploration segment, and the other verticals like media verticals, which in which I think the Moneycontrol also comes into. I think this company remains absolutely very, very convincingly positioned in each of the verticals, and that's where probably you can expect an average growth in the consumer-facing business of around 18 to 20% continuing for next 5 years. And for industrial verticals, I think average growth of around 10 to 15% continuing for next 10 years. So I think we remain absolutely convinced about the prospects for Reliance Industry as well as for Reliance Geo.
Well, Deven Choksey, with your thoughts, thanks a lot for taking out time and joining in this morning and sharing your perspective with us. Appreciate your taking out time and joining in.
Thank you.
Well, with that, we've come to the end of this edition of Opening Bell. From me and the entire team, Nickey, and of course, all the other PCR team. Thanks a lot for joining in. But of course, stay tuned to Moneycontrol for all your other news and updates.